controlled and doing nothing. They're just sitting there providing liquidity and waiting, which is good because there's obviously much less attack vectors there, and if someone were to pull off, like maybe they figure out how to get the bonding contract to like promise them more Ollie than they should get. In that example before, you should get 15 Ollie, but it gives them 150. We have a month to figure that out. It's not like it's something that's going to happen immediately, and then we're all screwed. It's more like, okay, there are 89 epochs more before they can do anything with this. All right, guys, what do you want to do? We can literally take weeks to figure out what we would do. I don't think it's something that'll happen, but again, just like very much focusing on safety. What else we got? To hedge that, so that means that there will be no rewards generated by the protocol for the first month, because the protocol only logs its gain during or when the bond is redeemed, right? So for the month where they're waiting, the protocol doesn't consider anything to have changed, right? It's made a promise for new Ollie, but it hasn't minted it and it hasn't taken the funds yet. So in terms of intrinsic value, in terms of like staking rewards, nothing has changed until they redeem. That means that we have a month of no rewards being generated, which is a little problematic. So, but it is good that we have the Genesis LP share, which helps hedge pretty significantly against that. We can basically lock in 175 or no, so we're including the LP Ollie, so the Ollie and the LP share from the start. It guarantees 125% rebase or something, or 125% supply growth, which will translate into 1%-ish rebases every epoch for the first month. So that should that should kind of alleviate things in that we're still pumping out like 100,000% plus APYs, just off of that, and we have it locked in is the especially good part, so we don't really have to worry about it. And then I put a 10 epoch delay on that, right? So it takes until epoch 10 starts for those rewards to start getting deposited, because that means that for anyone who bonded from epoch 0 to epoch 10, they will start to vest by the time those rewards are like wearing off. So there should be a nice transition from these like Genesis LP staking rewards into bonding LP or bonding rewards, where the premium on bonds is translating into new Ollie for stakers. I'm hoping that it becomes kind of a smooth thing where no one even notices that it's no longer like the pre-programmed like LP that we had sitting around. It is now just the system working as expected. So the bigger part about this, which I think is a really good thing that we're doing it like this, is this effectively constrains all supply growth to liquidity, and to locked liquidity, no less. So either we remain absurdly scarce, where there's, even after all those rebases from the LP share, we still have 150,000 ohm in supply, which is pretty insignificant, and it's also most of it belongs to stakers. So in terms of like comparing it from Genesis supply, it's really like the same proportions. But either that's the case and we have no supply growth and this is just like an ultra scarce asset, or we do have supply growth, but it is accompanied by a ton of liquidity. Like it's like every $3 in liquidity, $4 in liquidity at least is going to translate into one Ollie. I actually expect it to be a lot more than that, because so I updated the bond explainer to reflect this. I changed around one piece of how the bonds work, where previously the bonds, the price of the bond was determined by some combination of like the risk-free value of the bond and the market price of Ollie, right? So if you remember, there was like a pitchfork type graph where you had like the risk-free value on the bottom, the TWAP on the top, and then like a midpoint that was their executing price. We've dropped that because I don't want to use price data there. Just complicates things, especially if we're doing this like bare bones type like alpha launch. So instead, a system that I think is actually like a lot better, like so much better, is that we will take the risk-free value and we'll divide it by the premium. So you get for bond equals risk-free value divided by the premium, right? The premium equals 1 plus the debt ratio of the network to the power of BCV, which is a scaling factor. So BCV equals arbitrary debt ratio equals debt outstanding divided by all these supply. So what this does is it creates an exponential relationship between the debt of the system and the price of bonds. So the more debt there is, so the more bonds there are outstanding that are waiting, that are vesting, and have not yet been redeemed, the higher the premium becomes on bonds. So it should create this like self-regulating system in which, people will come into bond until it no longer makes sense for them to bond because the price to bond is too high. And then either some bonds are redeemed and that creates more space and lowers the price to bond, and then someone comes in and replaces them, or price moves and either price goes up, in which case there's more room to bond because now there's a larger discount because this doesn't track price at all. So if price goes up, then suddenly that's all profit for the next person to bond. And so, it should serve to regulate itself in just what people consider sensible to bond. If they should bond until the discount that you get from them no longer makes sense to, and then people just won't add them anymore. And if someone does, then they're going to pay a higher price. If someone thinks that even where it's at right now is too much, they're going to pull theirs back. Either way, it creates a bond market basically for us. So I think that'll be really cool. But that also has a pretty strong profit effect, in that it allows us to conceivably charge very high premiums for bonds. Because if bonders pay those high premiums, then they do. There's basically no cap now on how much of a premium we can charge on the bonds. It's determined by what level people are willing to buy bonds at. Which means that all of the premium, all that profit goes to stakers. And so conceivably we end up with a nice transition into very high staking yields, just off of premiums on bonds. And then when we introduce sales, then we can kind of kick it into overdrive and we have the full system. I don't have too much more for you guys. I guess we are on a test net right now, which I would keep an eye out for, because I want to open it to you guys to play around with next week. So, check back here. And yeah, that should be cool. Let's see. What else? Anybody have any questions? can't lie, I don't do too much planning for these. I have things that I want to talk about. I talk about them, and then kind of just freestyle and hope that you guys have things that you want me to talk about. If anyone wants to come on stage, especially, like, have a little conversation with me. Unlikely, but you guys excited at least? I know I'm excited. Damn, I gotta play this with my crickets. Yeah, here's some alpha, just because, I don't have anything else to talk about, so I guess I gotta just leak some alpha. Do things, and you will get retroactive rewards. I'm very much of that mindset. So a very good example is with the Discord offering. I did a couple little teasers, but I did not tell people, if you're in the Discord, you're going to get into the launch event, because I shouldn't have to tell you that to get you in here. You should get in here because you want to be in here. And then, having done so, now you get rewarded for that. I will take that route 9 times out of 10 over, I'm going to tell you what reward you get for doing this thing. I think that it attracts the wrong people. I don't want people who are just like trying to do something because they want the payout, and then they're just going to like leave and never come back. Like, technically no, but like, like, just don't talk about it. What's it called? Yeah, so, I mean, like, I don't know. Hopefully you can equate that to what I said, literally like 2 minutes ago as well. Participate in certain things, and, good things will come, I hope. Yeah. I guess... yeah, I would love it if, as we ramp up this week, that you guys could kind of pump our social volume a little bit. Get us out there on the Twitterverse. So that's where like the community challenge comes in. But even if you don't want to make things for the community challenge, if you could like follow it and find things that you like, and then amplify them, that would be awesome. Help out your fellow Olympian. Yeah, because I definitely want. This is the kind of thing that I imagine as marketing, or that I picture as marketing. So I'm not too interested in paying shills on Twitter to talk us up. I'm not going to do it. Like, doesn't make a lot of sense. I think that it's like one of the worst aspects of CT. Our social volume is not going to come down to me paying people to talk about us. It's going to come down to you guys wanting to talk about us. So, like, hopefully you do. Yeah. What else? Any questions, guys? Any concerns? Any excitements? Any emotions at all? Yeah, true. I mean, you guys are the real ones. You're the lucky ones. You're here before. Like, it's so early. Like, it's absurdly early right now. We're not even trading yet. If you didn't get into the launch sale, like, don't feel discouraged. It's not that big of an edge. Like, it's obviously better terms, and it's like locked in terms, which is helpful. But don't let it discourage you entirely. It's not the end of the world. Like, think about any other project. You're not like worried about like, oh, I didn't get in on the pre-sale, so now it's not worth it. Like, no. I would say that we're probably going to have bots push the pool up pretty quickly. Just based on what I saw with like Alchemix, I think that they're a good like demo for how this might shake out. And they had a bot within the first block of starting trading that bought up a whole bunch of supply. We still don't have that much liquidity, which is good in that regard. Because they can just, if they're going to do that, they're just going to push the price way up, which kind of hurts them as well. But yeah, I would try to, I'm going to be buying in the pool, and I'm going to do it as quickly as I can, because I would imagine that it's not going to be very low for very long. That's the thing here, is that because supply is so scarce, conceivably the premium is pretty ridiculous to start. You can look at, so we'll have, approximately twice as much supply as urine does. And urine trades for $45,000. I think that at least a couple hundred is to be expected here. But I don't see that as a ripoff. That's the thing. I still think that those people are gonna come out okay, and it's gonna add a whole bunch of liquidity for us at really high premiums. And the premium on the bonds becomes a significant amount of profit. And so even if we're splitting that profit 50-50 with the bonder, where trading at $100 and they're getting their bond price is $51, we're still taking $50 for stakers off of that. Only $1 needs to be put aside to back the token. I think it's a net beneficial scenario, especially since it's so correlated with liquidity. Because if it's that high of a price, that means that the majority of the liquidity that they're adding is DAI, which is kind of what we want. We want as much DAI in the pool as we can get, and then that should translate into once we open sales, there's a whole lot of liquidity for those sales to occur without really affecting the market. If the protocol each epoch is selling $5,000 worth, and there is $5 million in liquidity, I can do that for a very long time and no one's even going to notice. You're moving the pool by 0.2% every time, or every epoch. If there was no other forces in the market, it could conceivably do that for months. As some quick back of the napkin math, if we have 150,000 supply and we're selling $5,000 worth every epoch, that translates into 3% rebases every single epoch for stakers, which if you want to plug that into APY, we get that's a cool let's see, 1,000 million billion trillion. It's a cool 10 quadrillion percent APY. Not too much, but definitely some pretty cool numbers. It's just a little absurd to a point, but that's the power of compounding for you. Instead of these linear rewards that you get with other projects where you have your principal and you're earning on that principal, but what you earn doesn't factor into your principal, right? So, you're earning on $10, you will remain earning on $10. In this case, if you're earning on $10 and you earn an extra $2, now you're earning on $12. And then, if you earn another $2.50 from that, now you're earning on $14.50. And so it exponentiates you, which is probably the most powerful force in finance and economics. Please understand that, compounding is everything. it takes a lot longer. It's less satisfying in our ape brain. I just want the number to go up immediately and like 100x me, and now I'm rich. Like, it takes patience that might harm the people who expect this just a moon, but with that patience, you can do so much better than any coin is going to bring you, because it's passive and it's not reflected in price. Like, I really think that this is going to be a powerful dynamic, that we can have price flatline and everyone is making ridiculous sums of money. And so other people who aren't in are not going to understand that either. Like, they're going to be like, what's the big deal here? Like, price is falling. Like, you guys are losing money. And meanwhile, we're getting 5% rebases every day, like minting money on the side, and like, have fun staying poor, dude. Yeah, okay, like, this is how it's designed. This is how it should work. I want to make that very clear. Like, this, obviously, we have not launched yet. I can't say these things with certainty. This is how it should happen. But if it does work how it's expected to work, how it's designed to work, compounding is your best friend. Like, I do have a rough expectation for the first week. Okay, so the first 10 epochs will have no APY. And then we have 88,500 ohm from the LP. We do one of 100 one of 90 every epoch. Deposited every epoch. So that translates into, like, we're just gonna call it 1,000 ohm per epoch. That is getting minted. This is 2 stakers as well. This ignores. This already takes into account the DAO's cut. So if we start with, there's the 50,000 Genesis supply. Let's say 10,000 gets bought from the pool, so we have 60,000 staked. That's 1 over 60, which is, so that's 1.66% rebase per epoch, which, plug that into APY, gets you that gets us all right, it's 7 billion % APY is what my calculator's plugging at me. Yeah, I'll send the screenshot. Oh, that's not the screenshot. Yeah, I mean, it's just like absurd numbers. Like I'm very excited just because it's kind of a math hack that like allows us to pump out some eye-popping numbers. So with that number right there, you would multiply it by 100% to get an APY. But you would subtract 1 from it. So instead of, this is a pretty big difference, but instead of 72,530,218, it would actually be 72,530,217. Okay? Very big difference. That extra 100% is going to be very significant, I'm sure. Yeah, so that'll decrease, though, as we go. Because that directly translates into more supply in the staking pool, which means that now that 1,000 per epoch is a little less significant, right? Because now the denominator is no longer 60,000, it's 65,000 or 70,000 or whatever. So I think it should come to tune in on, at the end of the month, around 1,000% APY. It depends on how much supply is staked, but like I think that's probably a likely outcome. But then we also have at the end of the month, that's when the bonds start to be redeemed, and so profit comes from those, and it should there's a 10 epoch overlap between when bonds can have redeemed and start, like, be redeemed from Epoch 1 on, and these still pumping themselves out, which should serve to transition us, and then you don't even notice it. It's just APY went down for the month and got to Epoch 90, and then APY started going back up. And then, we conceivably find some equilibrium. It really depends on who bonds and who redeems their bonds. I do want to. This is going to be a task that hopefully I can put out there for you guys to take on. One of you developer inclined peoples. I want to make a tool that allows us to estimate APYs in the future, because we have on chain like when a bunch of bonds are going to vest, and when they get redeemed, we can calculate what profit will go to stakers in those scenarios, because they've already locked in the price, they've already locked in their premiums, and so we know exactly how much of that is going to back their own tokens versus going to back tokens for stakers, which means that we can create a dashboard kind of a thing that says, okay, 4 days from now we're going to have 1,000 Omen bonds vest, and then 5 days from now, like the next day, it's going to be like 1,200, and the next day it'll be 800 and whatever, and then we can estimate what the APY will be. We can even estimate like an average APY and spread it out over more time so that it's less chunky and day-to-day based. But I think that'll be a good tool for forecasting, which is kind of an important part of the equation for bonds. Because I tried to make it as little gambling as possible. With ESD, their coupons are just gambling. You're just taking a bet, putting it on black, that it'll come back above $1. In this case, it's not so much gambling. You have control over your LP whenever you want it, and you have this option between the LP or the actual OHM token. But it is an important part of the equation if you're trying to bond, that you can predict what the market is going to look like in a month. Because that's what matters to you. It's not what it looks like today; it's what it looks like in a month. So what you want is either price to be flat or to have gone up. And if price went down, ideally it didn't go down further than the discount that you got on the bond. But if it did go down that far, then you have this choice of okay, which one is at a deeper loss? Basically, is it the OHM that I would get by redeeming the bond, or the LP share that I hold if I just withdraw the bond? Because they have different risk profiles and different they're correlated, but they're not perfectly correlated, right? So on the downside, an LP share is actually a little bit better to be holding past a certain point. You'll take less downside on it because the pool balance kind of does that for you. Yeah. Oof. No, bro. Don't leave us. Yeah, so that's a pretty important dynamic, I would say. I think that's where the bond market kind of thing comes in that, I was talking about with the premium before. I expect that the bond market will factor in all of these, pieces of things that you need to take into account. It should factor them all in and then come to a premium that is acceptable to the market. So, it provides this % discount on the market because this is the market's expectation of what we look like in a month. And this is your fixed income reward, because if you remember, if you're staked, you're getting this inconsistent but probably more significant yield, right? You're getting all these rebases from all the profits from the system. The bonds are much more taking that same dynamic, but in a fixed income sense, where rather than just sit in staking and hope for the best, you get you lock in what your rewards will be for the month in advance, and then it's just a matter of waiting, and then you get those. but based on what staking is yielding, like the bond market should take that into account and kind of regulate itself to a point where it makes sense to vest and just lock in your yield now, because you know that it's somewhat comparable to what you're going to get staking, and it's a lot safer. Yeah, so that's a lot about bonds. Overall, I think that this is a really good way for us to start, just because we're going to build up all this liquidity, hopefully. And the protocol owns that liquidity. I mean, that's the great thing, is that, you know, especially for any whale individuals out there, what's it called? Yeah, okay, if we get all this liquidity in there, you know, you can feel comfortable and secure buying a large amount of OHM, because you know that liquidity is not going anywhere. I would say that's probably one of the biggest concerns for people when they buy a token in a large quantity is, okay, I can do this now, but when I want to sell, is this liquidity still going to be here? You know, so is it locked? If it's not locked, you know, what kind of patterns have the liquidity providers shown? Is it one LP or is it a ton of them? All these different factors that like will help you make your decision. In this case, you know, by far the largest LP, if not the only LP, is the protocol, and the protocol just takes an LP and never gives it up. You know, we haven't even added in yet where, you know, eventually we'll have it where when we go undervalue, the protocol will pull out some of the LP and, you know, burn the Ollie and deposit the DAI. But at least for now, we're not. You know, that should serve to like let us get back to a premium. But for the time being, like, there shouldn't even be enough supply per se to get us that low. Yeah, and I mean that should serve to like alleviate people's concerns, because, like, you know, fun fact, one of the strongest reasons that ESD died, or, you know, at least almost died or whatever, you know, they have their CUSD now, or CESD, but is the last time that it was in expansion that fell below $1, it tried to get back above $1 and then became pretty clear that it wasn't going to again. And at this point, it had about $120 million in liquidity, right? Like a lot of liquidity. When the moment it became clear that it was not going to be able to get itself back above $1, all of that liquidity pulled. $100 million in liquidity pulled out of the pool. And so suddenly everybody's the bag holder because there's no exit. There is a very small door now and a lot of people trying to get through it. You know, like, that is one of the most detrimental dynamics that you can possibly have. Like, you know, if before that LP got pulled, they had a chance. You know, it wasn't the end of the world, you know. Like, the bonds could have worked, or the coupons. Like, after that happened, it was over. You know, because suddenly, you know, that's going to freak people out. Price is going to go lower. Now no one wants to do the coupons because they realize that it's gambling and they're probably going to lose the money. And then people just keep selling and, like, I'm talking ESD, but yeah. Yeah, I mean, it's just a really a good dynamic that we want. So, you know, the protocol owning this liquidity is good because we can mitigate that from ever happening. You know, so there's always going to be a pool for you to exit from. Yeah, I remember saying this on the last call, but I have tried to take a lot of lessons from our predecessors. You know, whether it's ESD and DSD or it's Ampleforth or, you know, Frax. I'm pretty excited about these new ones, like this new class that we seem to be a part of. Like Rye, I think, is cool. It doesn't really quite make sense to me why people are playing it, because I don't think that they realize that the APYs are like 80%, and you're taking on like a good amount of risk there. But, you know, people are participating there. You know, float is cool. Faye is cool, but will it ever launch? I don't know. Anyways, we seem to be a part of a new class of, algorithmic currencies that I think is really exciting. I think that we're going to move the space forward another level, and it'll be a fun experience for all of us. And hopefully, I'm gonna do as much as I can to learn from what they're doing, and I would imagine are going to do the same about us. And because there's a lot of cool mechanics and stuff in those other coins that can definitely be implemented into this. More on that later. I have a fair bit of ideas about some stuff that we can do there that I think would be pretty cool. Any questions? Yeah, so this is one thing that I was thinking about. So if you saw in the general chat the other day, we were talking about how there's almost definitely going to be some remainder on OHM left to purchase from the launch event sale, right? Because if anyone no-shows, no one can buy their allocation, right? It's just sitting there waiting for them until the sale closes. And so unless everyone shows up and buys, there's going to be some amount left over. What I am thinking about doing, and I think would be good to do, is, what is the current number here? You wish, bro. Right now we have 255. So it's about, bro, chill. No, you're not. We have 255, so that's about a little bit less than 200 per person, or $800 worth. But basically what I was thinking is that we would move up the close of that sale about probably 6 hours or so. So instead of it closing at, I think right now it's at 1500 UTC, it would be at 900 or 0900 UTC. So it kind of puts the heat on people as well, in that if you're trying to wait until the end, that better line up with your time zone. You don't want to miss it, and there's really no benefit to waiting longer than probably a day. People who are going to buy less than they're allocated will do that. And then everyone else, if everyone's just waiting, that means that everyone's buying their full allocation, and there's no reason to wait, because they're not going to leave anything behind for you. So it's going to make no difference for you whether you buy right now or you wait until 5 minutes before, and then everyone tries to flood the sales contract. And then you're also running the risk there that you're gonna miss out. But anyways, move that forward 6 hours, and then run a secondary sale right after that. I think we would just use the same list of people, but by that point, I would imagine we have about 400 to 500 participants. Let's say that there's 5,000 OHM left. We would make the allocation 50, and then go wild. There are now 100 slots here. We would actually probably make it 100. There's 100 slots, so there's 50 slots and 400 of you. Good luck. If you can get there fastest, then you can buy them. But it would do the same thing as the first sale, where once you take your allocation, you're taken off the whitelist. So we still have that constraint of no one can come in and take the entire pool. Will staking have a lockdown period? No. But it does have, when you unstake, you forfeit the last rebase. So you already know what the upcoming rebase will be. So you're forfeiting that, but you're also forfeiting the one that you just experienced. So that's a little deterrent. So there's no lockdown. You can just come in and out. If you were to stake and then leave staking in the same epoch, it's not going to make any difference for you. You're just going to get out what you put in. But that's just meant as a deterrent. Like, if you shouldn't really be like hopping in and out of staking. Like, basically that forfeit has the effect of you cannot stake, experience a rebase, and then unstake and take that rebase. It's not going to work because you're going to forfeit that rebase and you're just going to come out with what you put in. So you have to wait at least 8 hours to actually experience a rebase. So I expect that we're going to have the same experience with the sniping bot. There's no way to prevent it. I mean, that's what the sale is for, is that, 73% of supply or whatever is sold in the sale. So it's not a situation where everyone is screwed because a sniping bot just bought up 80% of supply. Because we don't really have, with Alchemex, they have a good amount of inflation and dilution, and so something like that is okay because that person's going to get diluted out anyways, even if they hold on to it. In our case, there's really not a lot of dilutionary forces in the system. We have infinite supply, but we don't have a lot of dilution. That's why we're doing this offering. It's very important that from the start we have a distributed supply, because conceivably, you didn't hear from me, but you can stake and not lose your percent ownership of the network. It will get diluted to some degree, but a very insignificant degree. The staking reward should match the supply inflation or exceed it. There will be times when it underperforms, but it's definitely not like other coins where they're just minting new tokens and you get none of them and they just serve as dilution that's going to go in the pool and, screw you. For every token in dilution, you're getting, a token, or you're getting 0.8 or 0.7 or 1.3 or, that's it's really important that we don't have one person end up with all of supply. So don't sell your bags into a whale, Oh yeah, OM is going to be the world currency. Duh. I mean, that is the goal, man. I think hopefully you guys understand the approach that we're taking now, which is basically, we're putting in place all these policy tools so that this thing is a currency, but we can control what kind of behavior it has. So right now, our focus is not on stability, and so policy reflects not stabilizing. But we can change those policy state to manifest other behaviors. So we can, I see the trade-off as primarily stability and profitability. If you got a lot of stability, it's probably not very profitable. I don't think it's very profitable to, DAI, for example. DAI provides a pretty consistent, pay for the people that help, keep their network, but it's not anything significant. You're not out there farming, DAI liquidations. It's just what they need to keep it going, and to maintain itself. It's not exciting though. It's not a glamorous thing at all. Versus what we're doing, which is okay. Let's throw stability out the window. No one's using this as a currency right now, anyways. So why do we need it to actually be stable? Instead, we can loosen up, and it becomes much more of a wealth generator. But I hope that through that, we can produce some wealth that kind of has a Bitcoin effect of, we become this really tight-knit community because, everyone likes the thing that made them rich. And then through all that support, and through, exposure that we will get from, I'll answer that in a sec. Through the exposure and support that we'll get from it being a successful game, I guess. That kind of lays the bedrock of the community that's needed to push something like that through, right? Even if you were to build the perfect currency, like the undeniable, like quantitatively the best currency possible, it would not matter if you couldn't get people to use it. That's the bottom, or like at the end of the day, that is the case. Like, people need to push it for you. Like, if this is that, like, if I don't have you guys, a strong community around me, it doesn't mean anything. Like, literally, it's just a piece of code that no one touches. And obviously, like, these are very, money is a societal construct and like a social agreement. So, I hope that this kind of helps put in place that, like, some level of social consensus that this can be something like that. Around what level I think it would be enough to aim for stability, I think that the market will dictate that. I don't think that it will be like, oh, we hit this milestone, so now it's time to stabilize. I think it'll be much more as we grow, the sales and just the amount of supply out there will just become more and more significant, to the point. I got what you mean. Yes. But anyways, supply will continue to grow. Liquidity should continue to grow to the point that we just kind of can't move anymore. It's just too heavy. That's when we actually pivot into stability, because it's kind of already done it for us. Now it's just kind of putting the icing on the cake, and like tuning extra things where things that were fighting that like stagnation kind of effect, now we pull back from fighting it and just embrace it. But it should be something where basically like the game ends and suddenly we go into a period of activity or inactivity, and it's like, okay, I guess now it's time to be stable. Like, we're at billions in supply. Like, it's probably too big to really be doing another 100x. So now we will try to stabilize at some conservative premium, where we can still grow steadily, but at a low enough premium that risk profiles are enough to justify buying, that liquidity is thick enough because the pool is almost balanced, or not almost balanced, but like close enough to balanced that big orders don't make a huge difference in either direction. And then, I still have a couple of extra mechanics that should serve to, when we hit that point, we can introduce them and they will add extra stabilizing forces. And what I mean by stabilizing forces is not really anything that's going to pick a number and then try to stabilize around that number. Like, we're not doing like Federal Reserve type things where they just like pick a number out of a hat and then now this is the number that we're targeting. It's much more just putting forces on both sides of the market. So you want more buying pressure and more selling pressure at the same time. You want to sandwich them together so that they're just pushing so strong on each other that it just can't move in the middle, right? They're just perfectly balanced forces. Kind of like tectonic plates, maybe, where they're just constantly pushing against each other. If you're going to use that analogy, then there will be periods of like earthquakes, per se, where like, those forces become a little unbalanced. But that's kind of the nature of a market, is that, we're not going to fight against nature, basically. Like, there will be periods where now there's less buying support. And what needs to happen in that situation is price goes down. Like, we're not going to play this Fed game where they just try to like juice numbers up forever. It's irresponsible. But that's the main goal of stabilizing factors, is countering forces of greater and greater strength, which serve to just provide like deep liquidity, basically, where people can come in and out without making an impact on the market, because these other forces that are just constantly at it are strong enough already that your order is insignificant in the grand scheme of things. Are there any strategies to grow the community? Yeah, I mean, so I do love my memes. So we're gonna do this community contest. I have a couple of integration ideas that, I would like to do. There is a question of like how that works. I think that once we launch, that should have a pretty decent effect on community building, in that from my experience with other projects and their Discord channels, they'll be sparse until number goes up, and then suddenly they're full of people. So, that unfortunately, I think that our industry is not quite above like people just go where the money is. Yeah, like I don't know. I mean, this is a good time to ask for some feedback. Like, what do you guys think of like the meme nature with which I kind of like market us and stuff? Like, I'm just trying to kind of have fun with it. Hopefully you guys like see that and appreciate it. I know that sometimes it might be a little weird, just because it's definitely not. Yeah, exactly. It's not like suits. Like, it's very not professional, but like, yeah, I'm just trying to like embrace it, man. I'm a memer at heart, and so like, it's definitely the most organic way that I can go about it. Yeah, I mean, if anyone has ideas for marketing, I've got an advisor on board, that this guy Reagan that has done marketing in the past for other projects. He's been helping me out a little bit. We're putting together a couple things that should be fun. But I mean, really what I want to do is just kind of make it fun to be here. So some, yeah, no, Armor is a little sus. Those guys are, dude, no, I'm just going to pay him 1 Bitcoin and then he'll talk badly about us. All publicity is good publicity, am I right? Yeah, I mean, I just want to kind of make it, yeah, I love Fiscantes. That dude is a beast. I just want to make it a fun place to be, pretty much. So, like, if you guys have any ideas for, like, oh, we could do, like, a little activity, like, doing this, and, like, it'd be easy, and, like, we just get people involved, like, please shout out. Ooh, yeah. You guys want to see a teaser of the website from the big man Jay himself? Yeah, I love Discord, man. All right, Jay, I think you can send it, bro. I don't know which one you're gonna do, but it's pretty sexy. I hope you guys know. Yeah, please do. I was like editing it yesterday, but I don't have his fonts, so I had to change all the fonts, and it made it look worse. This man's definitely got the eye for aesthetics that I do not have. Like, I don't think so, man. Yeah, no, so in the competition for sure. Whew, there she is. Thick. Yeah, she is beautiful. Yeah, mad props to Jay for that. Like, this dude is a mastermind. Like, wait till you guys see the D app. It is beautiful. You can do the competition for sure. And I know that you've already been pumping out memes, so like, you probably have a leg up. But I do have to say, like, for just a strong slot, like, I appreciate the fact that you have been like participating, and I love it. But I think just we got to keep it fair. This is what I've been telling everyone. I wish I could help, but like, there's nothing I can do. Because those are the rules, and I need to uphold those rules. Like, hopefully you guys learn this about me. Like, I am. If you ever watch South Park, like, I consider myself Randy in season 20. Man, I got integrity, or at least I try to. Like, like, I don't know, I want to lead by example that we follow what we say, okay? Like, I want this for our entire community, that, you know, we don't, like, there are a lot of communities that are very backhanded, and, you know, especially, like, in this space, this is probably one of the most prevalent things, is people will say one thing and do another. You know, like, be very careful when you're getting shilled things by people, because a lot of the time they're going to be shilling you because they're selling and they want you to buy it from them. I'm not like that. Yeah, so sorry, but that's how it is. You know, you're here now. It's not too late. Yeah, damn, you're right. I do say a lot, but I will try to pivot that to ohm. That's a good idea. Just constant shilling. That's hilarious, actually. Ohm. Yeah. I do say a lot, you know. I gotta piece together my thoughts, you know. Alright, we've been at it for over an hour now, so I guess, I mean, I'm fine to stick around, but I don't have much more to talk about. So if you guys have topics or anything, you know, I will keep going. But I need kind of like stuff to talk about from you guys, or else we can just wrap it up. Price prediction, I don't want to go into that. It's not financial advice, man. But just think 68,000 in supply, and at maximum 150,000 in supply after a month, and most of that extra 90,000, actually all, like, other than the DAO cut, oh, that's actually something I can talk about, but other than the DAO cut, all of that supply goes to stakers. So if you guys are beasts and you stake and you just hold that stake, that supply never hits the market, and it's the effect of there is still, you know, a 10,000 ohm float. Yeah, like, you know, keep that in mind. Like, keep those stake tokens off the market. You know, it kind of helps everyone. There is definitely, actually, this is a piece that I'm gonna post soon, about kind of just like a very basic game theoretic analysis of the system, basically to demonstrate that this is very much a positive sum game given people cooperate. If they're, you know, basically the only negative sum outcome is if people are in competition. You know, we want to be on the same page, and we want to cooperate with each other, because we will all do best if we cooperate. This is not a free-for-all kind of a game. Like, it is in that, you know, there's always individual decisions. You know, that's what a market is. But if we take a cooperative standpoint, we're all going to do better. Which brings me to what I was about to say, which is the DAO. So the DAO is going to get tokens right off the bat. I'm setting up a DAO right now. It will be, so basically, you know, we're doing DAO first. So that will be the entity. The DAO will exist from the start. We're going to do off-chain voting to start for all major decisions. Basically, you know, not Discord votes, because Discord votes are easily manipulated. But that DAO, unfortunately or not unfortunately, like, won't be open to everyone from the start, just because we need to distribute supply out, or else someone's gonna buy up most of supply for some insignificant dollar amount and then use it to exploit the system, or, you know, do whatever. And so that DAO will be consist of, you know, myself and other team members, but also our investors and advisors. So it will not be us controlling it. The voting power will be distributed among those parties. These are people that, there's enough of them, and they're well known enough that I would imagine you guys can feel comfortable with it, because you know, this is like a half step, but like, it's something that we need to do, basically. Hopefully that makes sense. Like, all of the decisions that will be made by that DAO will be, okay, we did a snapshot vote about this. Now, can we actually execute this transaction? And to do so, there will be a vote within that smaller DAO that the only purpose of it, it's not to make decisions, it's just to clear the actual transaction of what we decided as a community. So instead of doing a snapshot vote, and then I personally go and submit that transaction, it will be I go to the DAO, and then like among those parties, they verify, okay, yes, the community did say to do this, so we will do this. That's a hedge against myself. I'm not going to manipulate anything, but I don't want the opportunity to, and I don't want you guys like thinking that I may, right? I want to take away those attack vectors as much as I can. So yeah, that's basically how the DAO will work. I will put out a post that will explain that in more depth, but the purpose of it is not to make decisions. It's just to clear the decisions that were already made by the community, so that it doesn't have to be one key holder doing it. That was a last note. So other than that, I don't really have anything. We're back to where we were a couple minutes ago. If you sell OHM, you can't get it back. I mean, you can, but so the original OHM on allocation will be worth more if paper hands don't sell. Yes, of course. That is how any market works. The thing is that we will be small enough at the start that those sells will be insignificant, and it probably won't make a difference for the market whether or not you sell, but it will make a difference for you. So why are you putting bearish content on my feed, bro? Yeah, get that bear out of here. All bears must die. For real, man. This is the best industry in the world to be in right now. By a long shot. You guys are all here. We're all going to make it. It's going to be amazing. How did I get involved? You guys want to hear my origin story? So I bought the top in 2017. I'm quite proud of it. I bought Bitcoin at $19,720, and I bought Litecoin at $420. Really, really impressive numbers in my opinion. But I found an arbitrage opportunity, during all of the inefficiency of early 2018 alt season. If you guys are familiar with Nano, which was previously Ryblock's XRB, they only traded on this one exchange. And on that one exchange, for some reason, there was a 10% arbitrage opportunity between Litecoin and Bitcoin, where you could send your Bitcoin onto BitGrail. You could buy Litecoin for, if Litecoin traded on Coinbase for $400, you could buy it there for $360, and then send that Litecoin back to Coinbase and, swap it back into Bitcoin, send the Bitcoin back, buy more Litecoin. I basically did that. It was quite lucrative. It actually, I remember it hit one point where XRV was pumping so hard that arbitrage existed within the BitGrail exchange itself. So I could go like Bitcoin to Litecoin, and then Litecoin to XRB, XRB to Bitcoin, and then that would net me 3 or 4%. And then, just go back into Litecoin, then back into XRB, back into Bitcoin, and just keep cycling through on their exchange. So there wasn't even transactions that I had to do. It was just, put in trades and have them filled. So I basically, I did more than 100x in like 2 weeks doing that. And then turned out a couple months later that they were missing $150 million, and everyone was like, oh, where'd that money go? And I was like, ooh, that's probably where that money went. So if any of you were affected by that, I'm sorry, but I didn't know. But I got into trading from that. I started doing leverage trading, so I've been around, heavily since then, because it's pretty hard to have something like that happen and not get hooked. And yeah, I did trading for probably 2 years. I had an idea for something similar to Audius that I was working on in 2019 or early 2020. Had a whole plan for that, and then kind of discovered / realized that the music industry is a really hard thing to break into, especially with as, out there of an idea as I had. I still think it's something that would have worked, but also required a lot of support from the music industry itself, which is hard to achieve. But got into DeFi in April or May last year. Saw Ampleforth. That really changed everything in my mind. I think that the idea of rebasing changes economics pretty significantly. It is a technology that has not been available for people ever, basically, until now. And that kind of spawned this. And then, been workshopping it since July, basically. Multi-chain plans, yes. To be announced, but either Optimism or Polkadot. I think if we were to go DOT, we would probably try to do our own parachain, so that would require some scale. But the good thing about this is that this works really, really well fragmented onto multiple chains. This is something that I'll talk about more in the future when it's more relevant, but there are ways that we can set up kind of backstops between autonomous organizations that allow us to do a lot more cool things, because you can distribute risk out among isolated entities and do things that would be too risky to do on an individual level. Okay, good to have you, man. Yeah, we're gonna close up because it's definitely been a while. Partnerships and advisors in the work. Can't say, man. I still got to clear with everyone that I can name them. But we've definitely got a good list. Yeah, no more free alpha. We're closing up. Yeah. All right, man. Yeah, we're gonna close down. It's definitely been a while now. Hope you guys enjoyed. Hope that you enjoyed your free alpha. Extra insights that only the realists get to know. I hope you guys are excited. That's the main thing. Just get pumped, guys. We're almost there. Especially those of you that have been here for a month plus now. Respect for sticking around so long, guys. I know it's taken some time to get here, but I am also pretty proud of the fact that we have hit our timeline. I said back in end of January or whatever when we announced that we were aiming for a March launch, and we seem to be hitting that. There is still, I will say this, there is a chance that we have to delay. We're still testing. Testing is looking good, but we are not going to release unless we are confident that this thing is set. So, I really hope it doesn't come to that. I don't expect it to come to that, but if that is the case, it's going to be disappointing, but it'll be what it is. And I doubt that it would be more than a couple days or a week. But just as a heads up, I don't want to blue ball you guys too much, but safety first. I think that launching a week early is way worse, or is not as beneficial as the detriment of getting exploited. That would be far, 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 far worse. So if it's a matter of delaying or risking funds, I'm gonna choose delay every single time, and that'll just be what it is. Yeah, dude. Shout out NFTs. Y'all don't even know what's coming. That's some marketing too. There are NFTs at play here. It goes back to something that I said earlier. If you remember, you remember. If you don't, I'm not going to repeat it. But I think that NFTs are a really good tool to show appreciation and distribute some proof that you're here at this early stage, that is pretty capital intensive. So, like, you know, just be aware that's definitely part of the equation. Yeah. Okay. I think we're going to close down. A good hour and a half. I think that's enough. Yes, definitely do it properly. Safe launch. Safety first, guys. Look both ways before you cross the street, please. Check left twice. Thank you, guys. Thanks for coming. All right. See ya.